what are the top 3 questions that business owners out there should be asking their accountants?
Number 1, why are we not meeting before the year is over? Number 2, what else can you do for me outside of a retirement plan? That's like a CPA's like only go-to strategy. Oh, you should really consider a 401k. And then 3 is, how do I get to a 10% effective tax rate?
Wow, 10%. And what's the current tax rate in the US?
37%. So federal level, states have different tax rates, right? But like at a federal level, how do I get to a 10% effective tax rate? And if they say there's no possible way, then they just don't know better.
Claudio Gambin is the founder of Gambin Financial Group and a financial advisor specialising in helping business owners with risk management, tax planning, and business succession strategies.
Outside of work, he enjoys boating and fishing with his wife and 3 children.
Claudio, welcome to the Sideshed podcast all the way from Orlando.
What's up, man? Thanks for having me.
Good to have you, brother.
All the way from Orlando on the internet. You know,
Across
it's crazy.
The ditch.
Yeah.
Man, we're here today to make a boring topic very sexy. And I think between us, we can pull it off. What do you think?
I mean, I don't think it's boring.
Let's talk about tax evasion.
Tax evasion is very exciting, in my opinion.
But truthfully, we are here to kind of talk about like some tax-related topics here, and with the spin, I suppose, on making sure that you guys are doing things right and making the most of things that you're probably not doing at the moment. So thanks for joining us all the same.
Yeah.
And just give us a bit of a rundown as to where you're from and what you do.
So I'm from Orlando, Florida. I've been here most of my life. I was actually born in Brazil, moved here when I was 6. That's how I got the cool name.
Right.
And I started this business in 2009. I could not get a job here in the U.S. We had a major financial crisis. There was no job. So I'd say, what else do? You start a business. Did pretty well. Started getting into different private equity deals. Had a couple of healthy exits. Paid a bunch of taxes through those exits. And I was like, man, there's got to be a better way. There's no, like, at the time I was looking for somebody to help me, like, not pay 7 figures in taxes. And it was like, nobody had a good answer. And all the answers they had were packaged cookie cutter, just garbage. So found an opportunity in the market, like kind of figured out through my own pain, through my own dumb tax that I paid, how to actually build strategy around this sort of stuff. And then launched an organization helping business owners build and implement strategy around asset protection, around tax, and around optimization, because I had nobody to help me.
It's quite timely, actually, we're having this conversation. Quite literally yesterday, I was talking with my financial advisor, and the general conversation that we've been having together of late is, how do we get the money out of the business and into our bank in a way that's not going to have these insane tax obligations? And I think a lot of the listeners and viewers out there in the contracting space have this same dilemma where, basically they've got this business which is churning, it's making heaps of money, but how do they get the money out of it without getting absolutely pumped with the different tax brackets?
Yeah. And look, specifically in that industry, right? Because so we started this business specifically 2014 and started evolving and whittling into other things. And by 2019, like, I started saying no to anybody who is not in home services construction for a couple of reasons. But one, I want to be able to have a beer with you. Like, if I can't have a beer with you and we can't get along on that level, I don't want to work with you as a client.
Well, most contractors don't drink beer though, right?
They do. And it's great because it's cheap beer. It's cheap beer, right? So we can get a lot done with not a lot of money. But two, like, those individuals are so underserved. They're misunderstood. And most financial advisors don't have any sort of insight into that world. not all, but like most financial advisors cannot undergrasp the fact that if I own a roofing company, my best investments is myself, not your investment for me, not some stock market play. It's my company. If I can grow my company and sell my company, that's the way I'm going to win. Not giving you money to put in the S&P 500 or the Dow Jones. Like, that's not how we win in home services. So that's narrowing it down into that. Now it comes down to like most of our clients, or even the people we talk to that are not our clients, they just keep spending money in their business. And the more money they spend in their business, they think they're going to go make more money. But they keep spending money to try and avoid paying taxes. And I'm like, guys, that is the most expensive tax you can pay.
Like, oh, I'm going to go buy a new pickup truck because I need to lower my, that's just dumb.
My CPA told me I should buy a new truck. So I'm going to go buy, do you need a new truck? No. So you're going to go spend $1 to save 30 cents. Well, that's great math.
Yeah. So a quick question for you. Like you say, like where you said, the best investment is in our own businesses. Yes. What about like, are we going to touch on how you can like start building wealth personally through your business by extracting some of that income?
Yes. Yeah. So like that's part of the optimization work that we do, because unfortunately, and fortunately for me, because this is what I do for a living, most home services, most people in construction, they didn't set out to be a business owner. They were probably working for somebody and they realized I could probably do this a little bit better and more efficient. So I'm going to go start it for myself. So they know how to do that job, right? But they don't know how to scale a business effectively. And what happens is they truly become the one person doing it all. Nobody can do it as well as them.
Yeah, you pretty much identified the reason why this podcast existed and kicked off back in 2016. It's like essentially, cool, we have our license now. We can go and be a business owner. It says so right here with absolutely no qualifications on how to run a business or business nows. So
the best way to extract value out of a construction level business is by identifying what you are really, really good at in the business. And the first place you got to invest is in your weaknesses. Mm-hmm. So like, for example, in an HVAC company, if I've got someone that's an incredible tech, they don't need to be running the day-to-day. They don't need to be hiring. They don't need to be doing performance reviews. They don't need to be doing sales, right? They need to be in the field because that's what they're genius at. We can go take our profits and hire for everything else. And if we can do that, now we're able to scale.
Do you know you're like, truthfully, probably, I'm going to say the first, but there might have been another one or two over the hundreds and hundreds of podcasts that we've done in the past that has actually said that. And I've been saying this from the beginning. I say this to all our clients as well. I'm like, there's this whole myth, right, around build a business and get off the tools. Like, what does that actually mean? Get in the office and become the bookkeeper? Like, no, like that's retarded. Like your strength as a tradesperson is sometimes running the guys on site. It's sometimes swinging the hammer, managing the jobs, meeting with customers, closing deals. Like that could be that's your strength within your business, not necessarily all the other mundane shit which you've never learned or been trained on.
Or like that. So to me, I talk to clients about this and I say, listen, you take a week off, right? Go take a week off. You're not allowed to use your phone. Don't answer one email. Don't answer one phone call. What breaks? What breaks? When you come back, make a list of everything that breaks. Figure out on that list, say there's 17 things that break. On that list of 17 things, 2 things you are responsible for, 15 I don't know.
Apple.
I don't know what happened.
For the listeners and listeners
15
out there.
things you are not responsible for. Now you know exactly where to reinvest back into your business, into those 15 things. You got to find 1 or 2 people. That's what you do with your profit. Don't go buy real estate. Don't invest in the stock market. Don't buy a new boat. That's what you invest in. Yeah. And once you've done that a few different times, and by the way, that's tax deductible, right? When we reinvest back into our business, it's going to reduce our tax impact. But once you've done that a few times, now you've got a business that operates on its own. And you can truly do what you love. that's the best investment you can make in this business. And then we're going a totally different path in today's conversation, but like we're here.
Well, I mean, yes and no. I guess like the whole point of this conversation is to help people, like the listeners and viewers out there, understand where, how they can leverage their finances, right? So yes, of course, a big part of that conversation is related to tax. And I suppose one of the big things that I really do want to cover off on is how, trade business owners can like use their tax strategy to, develop a smoother running of the business, a smoother exit if necessary, all of those kind of relevant conversations.
Yeah.
I mean, like if I was to say to you, what are some of the hidden tax benefits that most, trade-based businesses, contractors and stuff never take advantage of? What would you say?
So the one thing that is being proactive, that's the one thing most people miss. Most people get to the end of the year. They then bring all of their books, their financials to their accountant in January, right? And it's too late. Everything you could have done is too late. So being proactive, having a tax planning conversation now, right, in Q4, that's step one. Because then we can identify, okay, here's what the income is going to be and here's what the problems are. And then two is identify where can you reinvest in your specific zone of genius that have tax benefits and good ROI for you. So I was having a conversation with a client this morning and he's like, hey, Claudio, I'm going to make 1.8 million. What do I do? I said, hey, why don't we go, you're a general contractor. You can build homes, you can remodel homes at a fraction of the cost that I could. I don't even know how to hang a picture on the wall, right? But you have a superpower that I don't have. Why don't we go buy some real estate before the year is over that we can put some money into and then flip next year, make a return? But when we buy said real estate, there's going to be a ton of tax benefits that come along with it.
Are they buying it through the business?
They're not,
right?
But they don't have to, right? Because the business is going to have a tax return that spits out to the personal. So when they buy it personally, we can leverage depreciation on the personal side to help offset all the income. Because again, I'm not well versed in tax in every country, but in the US specifically, the way that shakes down is the business will flow into the personal and the personal is where you pay taxes. So from that perspective, whether we buy it in the business or in the personal, it doesn't matter.
Okay.
Right?
It's a little bit different.
Or let's just say the client doesn't want to deal with that headache, right? I'm going to say, okay, well, let's make a few different investments that are not designed to appreciate in value. They are designed to spit cash flow out, right? So, for example, like an oil and gas fund, right? Like an oil and gas fund is a fully deductible investment here in the U.S.
Yeah,
and we have several funds that are paying out a guaranteed return, right? And it's cash flow. And the reason I focus on cash flow is because if I can slowly wean your personal lifestyle off of the books of the business, it creates more surplus in the business that we can reinvest back into hiring and growing and scaling the business. Also, it does something to your psyche that if you know your personal baseline financials are covered, you run the business completely different than if you need to generate income from the business month after month.
I totally relate to that. And one thing I did want to ask you, like you mentioned something before where like, we'll have our tax planning conversation in Q4, which for you is like the end of the financial year, which for us is June, regardless. Why do you say that the tax planning conversation happens at the end of the year, not at the beginning? Like if we're planning, shouldn't we be having that conversation at the beginning of the financial year?
Well, if you've got a really good team, you're talking about it every quarter, right? So that's step one, right? But here in the U.S., all of their tax strategy has to happen before 12/31. Because if it happens after 12/31, it impacts the following tax year. So in the U.S., like if we're going to do a depreciation plan, a deduction plan, if we're going to do a leverage plan, it has to be in place and funded before 12/31.
So you're saying that it has to be deployed.
Yes.
And you can only do that once you have the full year of data and numbers and stuff like that.
ish, right? Because you got to understand how much money are you actually making. You're going to make $1 million. Okay. In that case, your tax bill is $400,000. We know what the problem is, and then we can start whittling down to the problem.
Got it. Okay. So, I mean, what are some, I suppose, examples of like practically where you've been able to help like contractors design, maybe save, maybe make significant money through better tax planning? I mean, you mentioned, okay, one of these scenarios was like, hey, why don't you invest in a property, which is great if you want to build it. But then, of course, that is like a resource conversation too, right? You're like, well, yeah, I could do that, but like I don't have the staff and the team to be able to build this house. So
yeah. So there's a couple of like, again, US based, a couple of like cookie cutter level stuff, right? That most people never talk about. They're not going to move the needle a ton, but like there's the Augusta tax code that allows for you to rent your home to yourself. Well, you can rent the home to the business. The business gets to write it off. You can receive the income tax free. Some rules around that, but that's a cookie cutter one. Putting kids on payroll, really adjusting how you pay yourself from a salary perspective to maximize the tax code. You've got
it's
ordinary.
funny how different, like there's different.
Yeah.
I'm going to say like scams, right? In Australia, we have, so our 401k is called superannuation. Now you can go and buy commercial property out of your superannuation, and then you can lease that property to your own business. And if that's not the biggest scam in the world, I don't know what is. It's wild.
We don't call them scams. We call them hacks, right? Feels a little bit better. Less negative than a scam.
Yeah, sure. Oh, that's funny.
But that's another great example, right? Like you can buy, same thing here, a 401k, you could self-direct a 401k. You can buy a piece of property and lease it to yourself, no questions asked. But some of the things that move the needle the most, Matt, is through depreciation. Depreciation in the U.S. is when we can, the rules are super flexible, but we can also leverage into depreciation, which means that I can buy something with the bank's money. So let's say I want to buy something like equipment for $1 million. I can put $100,000 down, borrow 900, and I get the full $1 million of depreciation, even though it only cost me 100,000. Right.
But we have that here as well, especially for like vehicle finance and that kind of.
So similar concept, right? So like that starts to move the needle pretty aggressively. But again, it comes down to let's do stuff that's going to make you money, not just buy a truck because you want to buy a new truck.
Yes. Right. And here's the golden question. Okay. And this is the thing that I think everyone out there, you need to get better at doing. What's the one question, or what are the top 3 questions that business owners out there should be asking their accountants that they're not, and that could be saving them thousands or making them thousands? What are those 3 top questions?
All right. So number 1, why are we not meeting before the year is over? Right. That's, again, I'm sorry to kind of beat a dead horse there, but like number 1, why are we not meeting before the year is over? Number 2, what else can you do for me outside of a retirement plan? That's like a CPA's like only go-to strategy. Oh, you should really consider a 401k. Like, no. And then 3 is, how do I get to a 10% effective tax rate?
Wow, 10%. And what's the current tax rate in the US?
Top tax rate's 37%.
Okay.
So again, federal level, states have different tax rates, right? But like at a federal level, how do I get to a 10% effective tax rate? And if they say there's no possible way, then they just don't know better.
So this conversation then, I guess, is kind of heavily geared around, would it be fair to say in that regard, tax minimization?
Tax mitigation.
Mitigation. Okay.
Because there's also a fine line too, right? Your taxable income, your reportable income is what is used to determine how lendable you are. And as business grows, you're going to need a bank to help you get to where you need to go, right? Lines of credit, loans on equipment, whatever you may need.
Debt.
So if you just drive your income into the ground, no bank is going to want to do business with you. It's actually going to do you more harm than good. Mm-hmm. So I tell clients, you want to end up at an 8 to 12% effective tax rate. Because if you go to zero, you can't borrow money. And anything over 12%, well, you're paying too much. So that one client who was at 1.8 million I was talking to this morning, he was going to pay $600,000. We do what we do. He's now paying $200,000 in taxes. Okay. So it's a little bit over 10%. And here's where the difference happens. This is it. Like, this is it right here. What you do with the tax savings is what matters. It's not the tax savings itself. So my one client that went from 600 to 200, what he does with the 400 is going to make all of the difference in the world.
Right.
If he takes that 400 and buys a boat, might as well just, I don't know, I give up, right?
Sure.
But if he takes the 400 and hires 3 salespeople, that's what we're talking about, right? It's how do you take your savings and double down on growth?
So essentially investing in things that can reduce tax brackets. Is that what we're talking about here?
Yes.
Yeah.
So like, for example, if he takes the 400,000, right, and he spends, so not only is he saving money on taxes, but now next year he's spending that money on infrastructure, which is deductible. So it's going to reduce the tax liability next year. But hopefully those salespeople will then generate an ROI. They'll generate sales, right? He'll sell more homes, which will create a bigger gross revenue, which will create a bigger income, which will create a bigger tax problem. And then we go, okay, now you went from 1.8, now you make 2.5. Well, the tax bill on that is $750. Let's whittle it down. Let's do oil and gas. Let's do leveraged equipment play. Let's put your kids on payroll. Let's buy more real estate. Let's buy a corporate headquarters. Like, let's do all the stuff. Now we're back down to $250. We saved $500,000. Reinvest. Buy more real estate with that $500,000. Buy more commercial real estate. Reinvest. Buy your competition. Again, it comes down to just kind of slowly growing your business. Instead of you paying the IRS, paying the government, you're now growing your business with those dollars, becoming efficient. And there will come a point in time where you can go buy the boat, you can go buy the red Porsche, and there's probably a lot of listeners who are there. But it just comes down to strategy and being proactive.
Okay. On the topic of strategy, if I was to say to you, what's the fastest and most obvious win that you can see within a business within like the first 20 minutes of auditing their bookkeeping software?
What do you mean by that? I don't think I understand your question.
Well, like if across the board, if I was to say to you, right, here's 10 businesses, these are their P&Ls, these are their balance sheets. If you look at those and go, right, I know exactly what I'm going to be able to pick on average, like as an aggregate data, this is what I always see as businesses doing poorly or they could be doing better.
Yeah. Oof. So I think all too often as businesses start to do well, they start treating the business as their personal piggy bank.
Right.
And all too often, specifically in trades, the business is like an ATM.
I get that.
The more money you have, the more jobs you can do. And the more jobs you can do, the more money you have. So liquidity becomes everything.
I've even seen, this happens all the time, but like businesses that are like, oh, I just renovated my house and I put it through the business.
So it becomes a lifestyle business, which then like isn't really a business. You own a really good job.
Well, it becomes hard to sell something when there's no money in it because you've just written out to develop.
Hard to sell. It's not even sellable.
Right.
That's the thing about this industry, this sector. It's not sellable because it's all relationship based and the books are crap. Right?
Well,
the vendors, all the subs, all of your clients are all based off of your name and how good of a job you do.
Interestingly, I've done a lot of podcasts recently on the topic of private equity acquisitions and things like that, where it is extremely sellable. A lot of things have to happen for that to become reality. But
it's happening. It's so awesome, the roll up that's happening in home services.
Yeah, that's right.
Right. Like we've sold 6 companies this year, clients. We've negotiated and helped exit 6 clients this year.
So what do those businesses look like in terms of having something that's acquirable as opposed to, when people might first come to you?
Segregation of expenses. Okay. If there's too many lifestyle expenses in the books of the business, the EBITDA is not supportive of a sale. Even if we try and say, hey, we'll back all that out, we'll take the car payments, we'll take the boat payments, no, like it's not supportive. Number 2, you've got to have infrastructure. You cannot be a one-man band with 20 employees, right? If you're the only person that can take the phone call, it's not sellable.
Got it.
And number 3.
Is that like systems as well? Does that come under that bracket?
Absolutely. Absolutely. And number 3 is track record. I sold 2 roofing companies this year. Okay. One got a 3.8 multiple on EBITDA, and one got a 9.6 multiple on EBITDA. Similar size companies.
What was the difference?
One had 20 years of just hitting their numbers.
Track
the other
record.
one, track record. The other one, good year, bad year. Good year, bad year. Turnover of people, no depth of employees, no tenure of employees. You know what I mean? Like they thought it was all about the profit. If I can just show really good profit, I can sell this thing for a lot. That's not the reality. When these home service roll-ups happen, one, they're buying 2 things, right? Again, my opinion. 1, they're buying revenue. And 2, they're buying infrastructure. And they're taking all the really good infrastructure and expanding upon that and buying companies with really bad infrastructure. And that's how they get it super cheap. They just kind of plug that revenue into good infrastructure and they get a huge multiple.
Sure.
Right. So my one company that got bought for 9.6 multiple, that team became the team for the private equity roll-up.
Oh, really? Right. Okay. And so that was part of the conversation. It was like,
oh yeah,
right.
It was because they were buying systems, processes, intellectual property that my client had created. Because all of that, the reason they paid so much is because they can take all of that and buy a company for 4x and turn it into a company worth 9x.
Yes. Got it. Yep. Okay. That makes sense. It's a timely topic because that model is hitting our shores here finally. And, with the likes of some of these awesome tech companies like Service Titan and all of these guys that are sort of flying a banner and moving out this way. And that whole conversation it's becoming a lot more relevant in the sense that traditionally over here, trade businesses have kind of always had that conception of, well, this business is mine. And when inevitably one day I'll just have to shut it down because no one will buy it. And now it's kind of shifting. And we're seeing that the implementation of systems and all these strategies that we're talking about
and it's going to speed up. It's going to speed up, right? Because 2-3 years ago, the capital behind the private equity piece was all family office capital, which is private money, right? Institutional capital got involved about 18 months ago, in my opinion. So now you've got these open checkbooks that are just writing ridiculous checks for some of these companies. So you've got probably, I don't know how it translates over there, but I would say here, 30 months, 36 months before this thing kind of tails down. Because once institutional money gets in, it really accelerates and then ends.
Yeah. Yeah, that's right. I mean, that's the general consensus and why things are moving out here. It's like, well, there's nothing left to buy over there. They've already brought it all up. Let me ask you this. So within this conversation around like finances in general, who are the key team members that you need to have on your side, on the financial side, in order for this to play out? And I'm talking everything from accountants, bookkeepers, financial advisors, whatever.
Yeah, I would say whenever I'm interviewing a prospect, I'm asking like, hey, who's on your team? Right? You need a good banker. You need a really good banker. And again, US based, I would tell you need a good local banker. Not a
Define what a
big
banker is.
a banking relationship.
Right. So, like, what is that somewhere that you would lend you money and you would lend it and like, okay. So that's
Yeah, so like
you're talking about accessing debt, capital.
yeah, a good banker, a good local banker can understand the business a little bit more, because in most of these businesses, it's not just what the paper says, it's like who you are. So having a good relationship with a banker locally, that's not a big national bank, it's a local regional bank, can help you build lines of credit, it can help you get better equipment financing, it can help you really generate better capital, it'll bring better capital to your capital needs,
Access
so that
to
you don't
capital.
you don't end up paying a bunch of money for the cost of capital.
Why? Okay, just help me understand why you think a local banker is a better contact than a bigger.
Because at a big bank, you're a number, and it's all about your P&L.
Okay.
If your P&L doesn't show in their ratios, then they're going to say no to you. Versus if I walk to Michael, my banker, right now, and I go, hey man, I need $500,000. He's like, okay, I'm going to figure this out, how to get you $500,000.
But I mean, would it be fair to say that? I mean, I'm talking about, especially here in Australia, like there's maybe 4 or 5 key banks, and yeah, they all have local stores, but they're still part of the bigger bank.
Yeah,
Is that not the same?
Not the same. Like I've got, for example, I can go to Cogent Bank. Cogent Bank has one location. They only services Central Florida.
Wow.
And I can walk into the president's office that I know personally and say, hey, here's what I've got going on. And I do all the time, because I go, here's what my client's got going on. They need $1 million line of credit, and here's why I think you should give it to them. And it's a local decision.
Okay, so banker, number 1.
You need a good insurance agent.
Ooh.
Really good insurance. Personal and business. A good broker. Mm-hmm. Someone that doesn't represent one company, but represents a bunch of companies.
Right. Yep.
Okay. You need a good wealth management team, a good financial advisor.
Yeah.
That understands business owners. Okay. You need a really good accountant, CPA on the tax side, and probably a team of bookkeepers in that, right? And a good attorney. You've got those 5, you've got a badass team that and then, preferably someone like us that can quarterback it all. Because you don't want to be the one translating accountant to attorney and attorney to insurance and insurance to banker. You need someone to kind of quarterback and be the head coach and help everybody run their plays, so that you don't have to be that person.
Because I think the thing that I see and I hear commonly when I have conversations like this across the board is there's often these positions that are in place within businesses, but they just never talk to each other.
They don't.
And it's like, okay, well, here's my accountant, and occasionally the bookkeeper sends them stuff so they can do the final tax. But like outside of that, there's no real general conversation. Like even more to the point, like, and this is I think the biggest problem. Like, there's the business owners out there aren't having conversations with their team. I'm not just saying accountant, but their like entire team about what their actual goals are, within the business and outside.
Well, no one serves that role. Who's going to serve that role? Is it the business owner?
It's a strategist, right?
Yeah, and that's why we created the business we have, is to kind of serve that role. Because at the end of the day, if you're in trades, you don't want to go take that meeting. Then you got to learn a little bit from everybody. You got to be an expert, right? And you're not. So you're relying on people's information, and you're just translating one person to another.
Yeah.
And that's not where you should be spending your time. You should be spending your time in your zone of genius, which is probably either selling or in the middle of jobs.
Yeah.
Or with your family.
Yeah, exactly. And I think even like over here, I don't know about over there, but there's like a lot of businesses will, and a lot of accountants even will, have like their mindset is very much on reduction and preservation rather than like the bigger picture. And I'll give you an example of what I mean. Like some accountants, a lot of accountants, but perhaps most, truthfully, have like this. They think that their KPI is on how to save you the most amount of tax. And over here, especially, like sometimes that doesn't play into your court. Like sometimes you want to be you need to be upping your salary and paying more tax so that you can showcase more income so you can, I don't know, buy a house or whatever the heck it is, right? But those conversations don't often happen.
Yeah, they're one-sided. They're just one-sided, right?
Right. They're like, oh, look, we saved you this much tax this year. It's like, well, that's fucking great. But now I can't buy a property because we're not having to earn the money.
And again, not to plug us in, but that's why we exist. That's truly why we exist. Like today I had a meeting with a client. We went through everything they've got going on, where they're going. We went through the tax stuff. We went through their 6-month goal, their 12-month goal, what they're buying, we went through the entire picture, and then we'll take that and we'll get that to their CPA. Now we're meeting next week with their CPA, make sure they understand. I've got a meeting with the attorney next week. They'll understand what's going on. Their banker is my bank. I've already plugged him in with my banker. So like he's handled, right? The guy doesn't need to worry about the stuff. So if I don't do that for him, he's going to have to go do that for himself.
So I truthfully think like the power of this entire conversation is the fact that you guys out there watching and listening to this need to understand that the team is important, and you need to have that team, and you need to have someone that can like fly that flag and, as you say, be the quarterback for that team. Because it's like if people aren't, if these stakeholders are not having conversations and dialogue like together about the bigger picture, then inevitably it's just going to be a shitstorm.
And here's what I would say too, like just as a part of that, the whole idea, if you run a business and that's in your job, right? Like, let me rephrase. Example for me, I don't run my business, not because I don't want to, but because that's not where I'm the best suited for. I'm really good at working with clients and coming up with creative solutions, right? So Rachel, who runs our entire group of companies, she's the quarterback with our team, not me. And she comes back and reports to me on how things are going and what this and that, but I'm not the one spending my time. So like if there was one takeaway from the conversation we had today is like, go figure out where you are the best at in your business, and then use your tax savings, use your profit to hire the right people around you to go do the things that you are not good at. I know it sounds counterintuitive, but I promise you, if you are able to accomplish this task, you're going to make more money. You're going to have more time to spend your money. Your business is going to go up in value, and you're going to be happier.
Yeah, and I can tell you from experience as well, for you guys out there that haven't done this or haven't been down this path yet, having the data in front of you and the numbers be set up the right way, and just clearly telling that picture, like it's the number one thing that drives momentum and change, especially from the perspective of strategy. And if you don't have that data, like the team can help you collate that. And that's really, I think, I've said this so many times on the podcast before, like it's the number one thing that most businesses are missing is the strategy. And it's like, okay, well, this is what we're working with. Here's the data. This is where we want to go. How do we pull levers to get to that point?
Without a doubt.
And like that's relevant within what we're talking about here today with finances and tax. It's relevant within sales and marketing, which is like what we do. It's relevant within all different types of areas of the business. But the point is, you've got to have the strategy. You've got to have the time to sit down and actually take the time, make the time to sit down and actually strategize these things.
Yeah. And again, it's part of this whole thing. Everything is just being proactive, and all too often we wake up, we have these great plans for our day, and then the first fire happens and you put that fire out, and then the second fire happens, you got to put that fire out, and then you wake and you figure out the end of the day is here, and you've made no steps forward. You just put a bunch of fires out. Right.
Mm-hmm. Yeah. No,
so it's just taking one 30-minute window. And again, I could just go total sidebar, but I'm a huge nerd when it comes to like measuring and quality of time. So like I measure my day in 5 minutes sprints.
Typical accountant.
But like if I waste 5 minutes a day, right? Let's just say I just don't take advantage of that 5 minutes every single day. At the end of the month, I lost 2 hours. Right? At the end of the year, I lost a whole freaking day.
So let's talk about that. How do you plan your day and your sprints? What does that actually look like?
Yeah. Well, are you ready?
I'm ready.
From the moment I wake up to the moment I go to bed, everything is scheduled. There's buffer time, but everything is scheduled. I map out the entire day within 5 and 15 minute zones. So like, for example, I've got a whole hour blocked for this, right? Well, within 6 minutes of that, I have a 15-minute buffer on this side, but I'm going to try and capture as many minutes as I possibly can. And a lot of people will say, Claudio, that's crazy. That like I schedule time in for me to be intentional with my kids. I schedule time for me to be intentional with my wife. When I'm here, right, I only work 6 hours a day. But if I'm here for 6 hours, I'm going to get at least 6 hours worth of work done. Mm-hmm. Because if I know I can do that, and then this discipline around time gives me the most amount of margin I possibly have.
Are there any tools or things that you would recommend or use to help you achieve this time blocking model? This is a loaded question because I do the same thing. But I want to hear it from you.
Yeah, I mean, the first thing you got to understand where your time is going.
Sure, like an audit,
right? Yeah, time audit. The second thing is you need something that's going to be able to measure time. So, like, I have a 5-minute little sand thing, right? I forgot what this thing is called, but
it's a
whatever. It measures time.
Those things.
I forgot what it's called. I'm blanking. It's the beginning of the day for you. It's the end of the day for me. It's a mess. Yeah. My point is I'm always measuring, because it's incredible how we find time when we're measuring time, right? And then I start looking at how do I cut things. So every client meeting I used to have used to be an hour long. Well, I don't need a whole hour to get the job done. I need 45 minutes.
Yeah.
So now every client meeting is 45 minutes. So I bought myself 15 minutes. So every 3 client meetings I have an extra client meeting. Mm-hmm. So once you audit, you can then start adjusting on where you want to adjust. And then the last piece of that is automate, delegate, and educate. It's a formula that I use. Is something that I look for every single week. Like if I can automate something, it's no longer something that I have to think or actually do, right? If I can educate and delegate, I'm buying my time back. The silliest thing in the world is like, I love coffee. I'll probably have 2 or 3 cups of coffee a day.
Real coffee or like American Starbucks?
No, I'm a nerd. I'm real coffee.
Oh,
real
good.
Coffee.
I was going to say. I mean, you've got one of your best mates Australian, so he'll be able to teach you.
But like I taught my assistant on how to make my coffee. Super silly.
Genius.
But it buys me at least 15 minutes per day, right? You start adding that up. And then what I do with that 15 minutes generates ROI. Or even if it doesn't generate ROI, even if I take 15 minutes and I rest, it gives me the ability to be fresh and be more impactful during the times that I am on. So it just comes down to intentional decisions. The day is going to happen to you, or you are going to rule the day. And it really comes down to what you choose to do.
Let me ask you this. What about setting the intentions for the day in terms of activities and actions that need to happen? When does that happen, and how is that structured?
So we all have the one thing that moves the needle for our business, right? And my coach, Jason Selk, somebody that has helped me think through this, I've whittled down the success of my business comes down to 7 phone calls. If I make 7 phone calls every day, everything will work. And I know that sounds super silly, but that's how it is. And this year, we're going to be at 120% of goal because I made 7 phone calls every day, right? So that's the first thing I do every day. If I get to the office at 9:30, by 9:45, those 7 calls are done. Nothing else can take place. Nothing else can happen until those 7 phone calls are done.
Mm-hmm. I like that. Eat the Frog. Have you read that book?
Yeah, Eat the Frog, absolutely. Or The One Thing by, what's the name of the
not James
guys?
Yeah,
Keller.
Keller, that's it.
Yeah.
I love it. I think that, again, this is a similar thing. Like if I don't have a clear list of things that I want to do during that day will just go skew.
Yeah.
I'm in a habit now of making sure the day before that I'm like, I have to do these things tomorrow. These things have to get done. And these are the important things, and these are the nice to do things if I get the important things done.
Yeah, I call that organized tomorrow today.
Yeah. Yeah, I love it.
So
it's good. I've also got my digital version of your egg timer there. Egg timer.
Yeah. Egg timer.
There it is.
Sand clock. I think is what it's called.
Time class.
Time.
Anyway. Mate, this has been a great conversation. I loved it. Like, I think we've covered off on some important things here. The key thing for me, I suppose, is just like having that strategic approach to, well, everything, truth be told. I think that's where there's a lot of businesses have a lot of opportunity.
Yeah, be intentional, man. Make your choices yours. That's it.
I'm going to let you go and have your 4th cup of coffee.
Thanks, man.
I probably will. And I hope that was useful to you guys out there, wherever you are. We try to keep it as general as we could, but there's I really encourage you guys to reach out to Claudio if you guys want to have some conversations around how you can mitigate and reduce your tax and just do things smarter in the space of finance. So much appreciated, brother.
Yeah. I'd say the best place to get to me is Instagram right now, guys, at Claudio Gambin. That's where you can find me.
You're an Instagrammer.
I am on it. It's not somebody else managing it. It's me. So like if you send me a DM on Instagram, I will answer. Just put on there like, hey, Site Shed, heard you on the Site Shed, and I've got this question, that question. And I'll do the best that I can to actually give you a real answer, not just like some fake cookie cutter answer. Obviously, a lot of stuff requires details, so I do have to be a little bit general, but I'll do my best to provide value for you guys.
That's awesome. Appreciate that, brother. Thank you very much. And for listeners and viewers out there, that is a wrap. Hey guys and girls, how would you like all of the value adds left behind from our podcast guest all put together in the one spot? We've pulled every tool together, every template, every resource shared on the show, and we've packed them all into the Tradie Academy. It's free to join and it's built by the team behind the Site Shed and Tradie Web guys. Inside, you'll get marketing tips, business tools, and first access to future resources, all in one simple dashboard. Just head across to tradie.wiki/pod. That's tradie.wiki/pod. The link's in the episode description. And once again, you just log in once and then you're all set. And if you want to get notified of upcoming episodes, hit subscribe or follow.